Hey guys, good afternoon, everybody. I'm gonna go and set up this room real quick and then we'll get started with our mentoring session for today. So I'll get everything all set up right here. That's good. That's good. All right. That's set up right there. Today is Monday, January 10th. So, all right, I'll get a few minutes for all this stuff to get started. Let me get this link sent out, actually. You guys are in the premium. All right. There we go. All right, I'll give it a few minutes for people to make their way in. It's 3:01 right now, so we're barely getting started. We got a lot of time. But yeah, let me just give it some time first for everyone to make their way in. All right, looks good, looks good. All right, cool. So there's about 11 people in here right now. I'll give it a few more minutes for people to make their way in. Looks like people are slowly joining the room right now. Hey, Professor. Good afternoon, everybody. So today is the group mentoring session for K2. It's about 3:02 right now. We scheduled a session for 3 o'clock, so we will be going on for as long as we run out of questions. So if you guys have any questions at all whatsoever, go ahead and put them in the chat. We do have a couple questions that are already ready to go. I'm gonna wait for Adele to make his way in. Send me about 2 questions prior to going live. So get a few minutes for people to make their way in, and then we can get started with our analysis for today with pretty much all the questions that we have lined up here. So let's see, people are still making their way in. It's fine. Professor said, Sean, can you take a look at today's trading session, look at the 10-minute snipes? I want to master the 10-minute snipes. Yeah, sure. I'll do that, Professor. We have a couple questions from Adele. Oh, here he is. All right, cool. So Adele made the room. Adele has a couple questions regarding some variations that happened this morning. So we'll start off with that, but let me just give it a few more minutes. It's 3:03 right now, so I just want to make sure we have enough people in here. A few more minutes for people to make their way in. So let's see, this markup right here was from Randy. Let's see, Randy said that ink is for a few people. Yeah, this was the high-low scalp from earlier. So we could take a look at that too if you guys want. Yeah, Randy said all the right people are here. Okay, so I'll start off with Adele's question. So Adele's first question for today was for this variation right here. So I'll go pull that up first. If you guys have any questions, go ahead and drop your questions in the chat. I'm going to be going down the list through the chat in order. So by the order that you guys put the questions in will be the order that I look at the questions and analyzing what you guys need help with. So Adele gave me some questions prior to this live session, so I'm going to be going over those first. And then we'll be moving along with the rest of the questions. So Adele's first question here was regarding this this variation. So I already know the answer to this variation because Adele here is looking for a buy, and there was obviously no buys that we were looking for on open. So I'll go over that in detail, but I already know this for sure wouldn't have been an entry because we weren't looking for buys at that point. You know, going over these step-by-step checklists that we used, the retail sentiment was like indecisive. It was just like right down the middle. But the main thing that was key was the fact that fundamentals were down like 300 points on open. So we weren't looking for any buys, but I will go over and show you exactly what Adele saw. So I think it was at 640 something over here. It was this one. All right, 638. So at 638, Adele saw this variation right here. There was a lot of red flags here. So there's a lot of reasons why you wouldn't have taken this buy here for a variation. So the first reason is the fact that fundamentals were like 300 points in the red. So straight up front, you wouldn't be taking any buys anyways. That's one reason why you wouldn't have taken this trade. The second reason why you wouldn't take this trade is the fact that technicals were also bearish as well. So, you know, looking over at the technicals here, pretty much everything was bearish at that time, right? Everything was like deep in the red. So that's another reason why you wouldn't take it. So, I mean, everything pretty much checks off, don't take that trade. So looking at this here, fundamentals were bearish, technicals are very bearish. So definitely no entries there for any buys. Other than that, so there's two huge red flags there already indicating why you wouldn't take any buys there. Fundamentals are clearly red, technicals were clearly red. The other reason why you wouldn't take a specific trade here is the fact that this candle is so big, right? It's one of the key things that we look at. Pretty much all the main things that we look at applied here. You were trading against fundamentals, you would have been trading against technicals, and this candle here is too big. So when a candle comes up like that, there's usually going to be some sort of retracement, right? So you wouldn't even take this trade if that was the case. Looking at the next candle here, it's exactly why you wouldn't, because they did the retracement that we just identified. I mean, if you wanted to enter it late, you would just put a buy stop there and catch it as it swings up. But in that situation, I still wouldn't have entered it regardless because everything pointed opposite of a buy. So first things first right there, Adele, no, this wouldn't be a celebration. This would be a buy, right? Because this isn't like you marked up over here for this one right here, right? Or you're talking about this one. So you're talking, because you drew the low right here. So I thought you were talking about a buy. So I'll go over that right now. So first, this variation, we wouldn't have taken it for those specific reasons. Now look for a buy, for a sell right here. So this buy right here for sure wouldn't have been taken. For this one right here, this is another variation that would have came up, pretty much same entry, just for a sell. So buy and then sell. One reason why I probably wouldn't have taken this right away would be for that same reason what I just discussed. The candle here is just too big. Looking at this candle right here, this thing dropped about nearly 500 pips. So what generally happens after this is, you know, some sort of retracement to the upside and then come back down. So I wouldn't enter it right away, but I would get in for a discount, just like Adele said. So looking at this right here, I wouldn't have entered just yet. I would have waited for it to pull up a little bit. And then at that point, then I would enter a sell stop right here to catch it as it came right back down. So if I was to enter a sell stop at that point, right, I mean, either way, if you would have entered right away or if you would have taken the sell stop, because I think this is the same trade that we took, it still would have hit TP. So either way, you could have taken this at the normal entry point, or you could have just waited for it to pull up and then pull back, because this is the one that we took this morning. That's the one that we took over here, which hit TP. So yeah, it's the same exact entry right there, I believe, or not that one, it's one before that actually, this one right here. So it's the same entry we took this morning. A couple of reasons why you would wait for it to pull back is, you know, mainly because it's such a big candle, it'd have to pull back a little bit and then enter it later. And that's exactly what I did personally. You guys don't have to do that, but in a lot of cases, you probably want to do that just to be on the safer side. But either way, if you entered right at close, you still would have hit TP because your stop loss would have been wide enough to protect from hitting. So either way, it would have been good. But for me, how I took it, I waited for that pullback. And then when it came back down, I entered it for a sell and I went straight to TP. So there goes that question, Adil. Let me scroll up real quick. Let me see if there's anything else that you added to it. All right, Adil said there was 2 entries, one for a sell and then another one. Okay, yeah, so you have another sell there as well. Let me just scroll down a little bit. For acceleration, account you enter the trade. Remember you mentioned this for a discount. Was this a high-low entry? So this one right here wasn't the one with the, or actually, let me go back real quick. Yeah, I don't think this is the one that had the triple confluence. It was the one right after it. So this one right here was the first entry. The entry that happened after it down here was the one that had the high low. So we'll go to that one after. I think you had another question here. Let me check your messages. I think this is the one that you're referring to, right? You said at 7:02 a.m. So let me just scroll forward a little bit. 7:02, which would be right over here. Okay. So I believe, yes, this, I think this might have been, or no, this wouldn't have been a high-low entry, but this would be a, sorry, let me go back to your question here. So I think it was one prior to that. It was this one. So let me go back real quick. So this wouldn't be a variation, Adil, because there was no high there. This is the one, I'm pretty sure this is one you marked up, right? Or sorry, let me go. Yeah, so I think this is, I'm pretty sure this is the one right there. This wouldn't be a version 2 because there was no high that was there. So I went back to the candle prior. So this would be the pending, or let me just go back a little bit. Or which one did you mark up? I'm trying to see. I'm pretty sure it's this one. Or if not, let me go forward a little bit. Yeah, there's no variation here for a sell at all. I think you said it was at 7:02. So 7:02 right here, there's no entry. And there's nothing prior to that either. I think there was one right here though. No, so nothing there. Nothing there. There's no highs that were being established here at all. So I don't see any variations right there at all, Adil, for that markup. I'm not sure if you saw something different. Well, so let's see. So Adil said, so basically there should be a, yeah, of course, because that's the main requirement. I mean, it doesn't matter which variation you're applying. You can't just take a variation with no high low, right? That's the first requirement. If there's no high low, there's no entry. So looking at this whole period right here, I'm not sure if you saw something different, Adil, but I just went back in time and there's no highs that were that came available at this period. So this is 6:55. I'll go up to like 7:04 where you said there was no highs that came up here at all. So there's no variation that you could have taken at any point between that period. Yeah, so yeah, there would be no no entries here because you would need the high low to take it. So I think I answered all your questions here for those. You had another question regarding the entry that we took earlier for the high low, which was, let me just get the timestamp for that. All right, timestamp for this was about 7:10. So let me go back over here real quick and I'll cover that. Let's see, 7:10, which was right here. Kodi, relax. Sorry, you probably hear my dog down there scratching. This guy wants to dig. Or I'll take you to the dog park later. Relax. So here's the high right here. This was a variation that we took. I missed the high-low entry, but this was this applied as a variation. So this was the entry that we actually took right here for the sell. As soon as that closed, we waited for it to pull back a little bit, and then we entered for the sell right here. And it hit TP. So the first entry right here that we took, full TP off that. The next entry that would have came up right here was, so there's one variation entry right here, full TP. This candle that broke below was a triple confluence. The reason for the triple confluence is the fact that all 3 strategies lined up. Let me put them up here real quick. we had a high low, we had a intraday, and then we also had a pivot scalp. So the triple confluence is basically when these three strategies over here align off one candle entry. So looking at this over here, we have an intraday entry, and the reason for that is because we have a valid sell signal and the trend meter is red. So with those two lining up, it'd be an entry for the intraday. This is also an entry for the 1 minute pivot scalp. And the reason for that is because we have a valid K2 momentum signal right here below the pivot. So an entry for the intraday, an entry for the pivot scalp, and then lastly for the high-low scalp, we have an entry here as well. Reason for that is because we have the low established right here. We have the low, 1, 2, 3, 4, 5 candles. This low has been established. The second requirement, you want to confirm a break and close past the previous swing, which would be right here. Third, you want to confirm the direction of momentum. Right here, we have a sell signal, so momentum is pushing to the downside. And lastly, you just want to confirm that price is not ranging or consolidating. So looking at this right here, price was in consolidation, it broke below and closed, so it's no longer in consolidation. Lastly, you just want to confirm that this price hasn't been touched prior to it breaking and closing. So with that said, all three strategies have aligned on this candle, and this would be another entry for triple confluence. So right there, if you were to take both entries, the variation and the triple confluence, straight TP right there. What a lot of people did here, because you did see like a lot of people have bigger profits. What they did was they took the variation here and they just held on to it. They didn't exit right away. I exited because I had a set TP, so I couldn't move my TP in time. And I didn't realize that another entry was setting up right here. So with that said, some people caught it like way down here. They caught like, triple, if not quadruple the profits because they held on to it as it continued to drop lower. So this right here would be the entry for the triple confluence. Let me check the chats over here real quick and see. Adele said, do we need to recount only after lower low? Adele said, and within 5 candles, should we include the lower low candle? So you don't include the lower low candle. You start from after it, Adele. So for example, right here, we have the low candle, right? And I would avoid from identifying them as lower low and higher high, because I feel like a lot of people get that confused. This is a low and this is a high. You don't have to look for a specific lower low. You just have to look for a low. There's either a low or a high. It doesn't have to be lower low and higher high. It can be lower low, lower low, et cetera, et cetera. So I would just refer to them as low and high. If you have because I do see some people applying specific strategies for just lower lows and higher highs, but I just don't want people to get confused, because you don't have to look for a lower low. It can be a higher low or a lower low or a higher low or a lower high or a higher high. It doesn't really matter which one. It just depends if it's a low or a high. So looking at this right here, this you would start the counting after it, Adele. So we have the low here, you count right after. So 1, 2, 3, 4, 5. You wouldn't count this one right here because this wouldn't be a candle following the low. It'd be the candles after it. So 5 candles have to pass after the low, meaning we have the low there, and then 5 candles pass after 1, 2, 3, 4, 5, and then now it's established as the low to clear any confusion. So hopefully that makes sense. And I think that's it with your questions for now, Adele. If you have any other questions, feel free to drop them in the chat, and then we'll go over more. But I'm going to go back and review the other questions here. So let me scroll back up. All right, first question here was from Professor. So Professor is asking, Sean, can you take a look at today's trading session? And let's look at the 10-minute snipes. I want to master the 10-minute snipes. Okay, sure. So let's go back to the 10-minute over here. Let me put let me go over here real quick. Market opened 6:30 right here, or is on, sorry, I'm like so far behind. Okay, so actually, I think we're okay right here. Yeah, so this is when the market opened, right? At 6:30. Depending on where you were looking for entries, there was a lot of entries here that were pre-market. Professor, I'm not sure if you identified them, but I'm going to go here and just draw some zones around this area. So we got a couple zones right here. I'll go over the ones that happen pre-market too, because I know a lot of people like to take these pre-market. I don't really recommend it if it cuts into the opening time, because you get that big gap. The gap can either go in your direction or go against you. So it becomes really risky if you take any of these pre-market moves. However, there was a lot of entries here that came up, during pre-market, basically from London session up until New York open. So I guess we can look up until like here before market open if you were looking at these pre-market entries. So I'll just go over here to when market open here at 6:30. And this strategy here is really simple. I feel like a lot of people overcomplicate it or they just get confused. I mean, you're only looking for like so many things in the market, right? You're looking for a wick rejection off a pivot and you're looking for a wick rejection off the structure. So for example, right here, we have about, let me see if I can just use the arrow. It's a lot easier. All right, so we have one entry right here. I'll make this a little smaller. Let's see if I make it smaller. Okay, so we have one entry right here. A little bigger, actually. There we go. One right there. We have another one right here next to it. And then we have another one right here. And I'll show you exactly what I mean by these being all entries. So let me just go back real quick, replay it to this point. All right, so I'm just going to show you the requirements once because it's going to be the same thing. It's not very difficult. I feel like a lot of people overcomplicate it, but it's really simple. You're literally looking for the same rejection off and that one rejection is going to line up with like everything. So here's one right here. We have one rejection off the wick, off the pivot. So we want a wick rejection off the pivot. That's requirement one. Requirement two is that it's rejecting off the zone. So we have a zone here. This pink square is a zone. This blue line right here is a pivot. So we have rejection off the pivot, the zone. You just want to make sure that the wick isn't touching, the pivot isn't touching the body. And all this stuff can be done in like one look, right? You don't have to look at everything separately. I feel like a lot of people look at things separately and that's what kind of confuses them. But literally, you're just looking at the wick. Okay, what's the wick touching? The pivot? Okay. Is it touching the structure? Okay. Is the pivot touching the body? No, right? So just look at it in one look. I feel like everyone kind of looks for, they're like, oh, where's the wick rejection off the pivot? Obviously, it's rejecting off the pivot. And they're like, okay, where's it rejecting off the zone? It's like, you just look at this point right here. If you zoom in and you look at the end of the pivot or the end of the wick, what's it touching, right? It's touching the pivot. It's touching the zone. Is the pivot touching the body? No, right? You can do that all with one little glance at the wick. So it's not that difficult. You're just looking for that really quickly. And then after that, you just want to make sure that you have a sell signal. So this actually wouldn't be an entry. Now that I'm looking at all the requirements here, this wouldn't be an entry. And the reason for that is because we didn't have a sell signal. So this is actually not an entry. And even if it was an entry, I wouldn't have taken it because I don't take stuff pre-market. Like I mentioned, I don't like it lingering into the session. However, if you guys have been part of K2, this last requirement, confirm trading in the direction of momentum, this wasn't a requirement before. This is one that we included after. So using the original strategy, this would technically be an entry, but we included this confirmation here to increase the probability of winning. So, I mean, if you guys have been around K2 for a while and you guys knew the strategy before, a lot of people still take it without the sell signal. I personally wouldn't recommend it because, we're going for quality trades here, not the quantity of trades. So that would be an entry there, or I'll just leave the dots there if you're using the original, but the new updated one right here doesn't include it. It wouldn't qualify. So no entry off that. This would also be an entry if you were to, so I'll just draw a line here. If you weren't adding the fourth requirement, these were the original requirements right here. These would all actually be entries. So all of these right here, or not that one. All of these right here would technically be entries. So this would be an actual entry. So these right here wouldn't qualify using all of the requirements here. So we'll just disregard these two out, even though they would work. This one right here would actually be a valid entry. So we look at the wick rejection right here. It's rejecting off the same pivot. It's rejecting off the structure. We do have a sell signal here, so we're trading the direction of momentum. And we make sure that this pivot here isn't touching the body. So with that said, you could have taken this for a sell if you wanted to. You would go for 500 pips, both directions. It's for a 1-to-1 risk reward. And if you were to let that run, it would hit full TP. But like I mentioned before, guys, I wouldn't have taken this trade here, even though it looks so good, because it's on open. So when the market opens right here at 630, one of two things can happen. It can either push directly to your TP or it can push directly to your stop loss. I don't want to take that risk, right? I'm not gambling here. I'm looking for trades that are almost guaranteed to hit TP. So I personally wouldn't have taken this trade. There would be another one right here, right after it. Same exact things that you guys were looking for prior. Wick rejection off the pivot, wick rejection off the structure. We have a sell signal right here. The pivot isn't touching the body. Another sell entry right over here. So, I mean, it just depends on how risky you guys want to be. I mean, you know, everyone has different risk tolerance. Some people want to take risky trades. I don't. So I wouldn't be taking it myself. But some people like taking it. So if you guys are okay with the risk and you guys are okay with, you know, taking these moves here, this would technically be an entry because all the requirements are met. And if you let that run, another full TP right there. So there's basically two valid entries that would have came up using all the requirements. However, they're not ones that I would personally take. I know some people still take them either way. So it's really up to you guys. You know, you guys are in control of your account. But for me, I don't like taking risky trades. So either way, if you took either of these trades, full TP, full TP. Let me scroll forward to see if there's anything else here. I don't think there was any more, Professor, because there weren't any zones that were up at that point. So I'm just going to keep letting it go further. Yeah, there are no zones down here. So there wouldn't be any entries because price reached a new area. So there wouldn't have been anything for you to take anyways. And then there's current time. So technically, if you were looking for entries here, Professor, there would only be two here that you would have caught. The one pre-market right before market open, and then the one on market open right here. And that pretty much be it for these snipes. All right, so that's it with Professor's questions right there. Yeah, no problem, Professor. Hopefully that cleared up some confusion there. You know, if you're confused about like identifying these entries, no worries. I know I make it look really simple and it's really easy to follow. I know for some people it's not really that easy because it's kind of, there's a lot of moving pieces there, but as you start to apply it more and more, you can do just like what I just mentioned, right? It's like a one glance thing. You glance at the chart and then you just look for the wick rejection. So you're basically just focusing on the wick. You don't care about the candle. You just focus on the wick where the rejections are happening. And it'll all become, you know, second nature the more and more you apply it. I've been applying these strategies for so long now, and I created them. So for me, it's not difficult, right? I know exactly what to look out for. You know, I can do it without the indicators. The only reason I created these indicators is to make it more efficient and to show you guys what I can see on the chart, because I can trade everything without any of these indicators. I only created these indicators to make trading more efficient and to show you guys exactly what I'm looking for. Because obviously, you know, you guys can't see what I see on the charts. Because I've been, you know, this is all like, it's like solving a puzzle that I already know the answer to because I've been trading for so long. Anyways, back to the questions here. Let me scroll up real quick. Here, let's see. Here, let me just answer PC's question because it's referring to the thing that we're just looking at. So what are you referring to right here, PC? PC said, how is the wick rejecting off the zone here? I can see the pivots. I mean, it's pretty clear right here, PC. I'm not sure. Example, where's your example at? Did you send it in here, PC? Because I don't see it in the chat. Oh, the example that I just gave. So the example right here, PC's asking, how is the wick rejecting off the zone? There's a zone right here, right? The wick is rejecting off it. Sorry, I don't like, it's kind of self-explanatory. The wick right here is pushing off the zone, right? So it's rejecting off it, right? Because what the wicks are trying to tell you is that price is pushing away from it. So if the wick is right here and the zone is right here, it's pushing away from it, right? Because it's a red candle, so price was coming down. So let me just show you real quick. So here's the candle before it came up, right? What's the candle doing there? It's pushing away from the zone, correct? So it's rejecting off the zone. So if it's pushing away, it's rejecting off it. You get what I'm saying, PC? It's kind of hard to explain because it's obvious, right? It's pushing away from it. Same with this right here, right? The pivot's right here. The wick is pushing away from the zone. So it's rejecting off the zone. You know, when things push away, it's technically rejecting, right? It is touching the zone. The zone's right here. PC said, okay, I thought it had to touch the zone. The zone's right here. This whole area is a zone. Does it make sense? I'm trying to make sure that it makes sense, PC. I'm not trying to state the obvious. I'm trying to make sure that you're actually understanding this, because this is, I mean, it's pretty basic. So I want to make sure that you're getting it. Does it make sense to you? Okay, gotcha. Yeah, because I feel like a lot of people, when they, and it's not just you, PC, it's everyone. A lot of people get really carried away with understanding how price is moving away, right? So not just the PC, but to a lot of people here, because I know this is a basic question that a lot of people have. And I mean, I personally don't understand like why people get confused with this, but if you guys see a candle here, so for example, let me see if I could just break this up for you guys. Let me go on a shorter time frame, because this might be able to make more sense. So for example, right here, this is where the 10-minute candle starts, right? So if you move forward, because it's about 10 candles within this area. So let's see, from here up until 30, if you're on the 1 minute, you can kind of see how price is pushing up, right? It's pushing up to the zone and it's pushing below. So it comes up and it pushes down, right? So it's rejecting off of this zone because it comes down lower. On the 10 minute, it's kind of harder to see because it's off one candle. But this right here, so I'm trying to like figure out a way to make it a lot simpler for certain people, or like for everybody, because whenever people see rejecting off a zone, they don't understand that the rejection is just the wick pushing off the zone. It doesn't have to push out of the zone. It's just rejecting off the zone. Because the thing is, if you have a green candle right here and it's pushing on the bottom end of the zone, right, then it's rejecting upwards. If it's touching it from the top, it's rejecting downwards, right? So just think of it as momentum pushing from one way to the other. So let me just take this stuff off. And I think this might be able to help a lot of people, because I know this is a common question and I want to clear it up as much as possible, because I get this question every time about the snipe strategy. So this will make a lot more sense, because look, price comes down and you see how it's bouncing off the zone. That's rejecting off the zone, right? Because price pushes back up. Price comes back down, the wick touches the zone and pushes back up, right? So it's rejecting back up it. Same situation over here. When price comes down and you see these candles right here rejecting off the zone, price pushes off it, right? So I feel like a lot of people overcomplicate it. It's really basic. Like, just think of you, like you guys in a bumper car, right? If you guys are in a bumper car, let me just show you good. So I'll show you guys the horizontal way. You guys are in a bumper car going this way, and you hit a wall, right? And you hit a wall. If your bumper car bounces back this way, it's rejecting off the wall, right? It's the same thing with the zones here. If price bounces off the zone, it's rejecting off it. Vice versa. If you guys are looking for price to reject off these points, price comes down and it pushes to the upside, it's rejecting off the lower side and pushing up to the top. Same with price coming up here. If price comes up to the top and rejects off the top, it's pushing to the downside. So I'm not sure if this like confuses anybody else, but if it does, and this explanation here doesn't help, let me know, because I want to figure out what the problem is, because this is a question that I get pretty often. I'm just trying to figure out a way to like break it down for people to actually understand what does rejecting off a zone mean, because this is something that I don't want to keep going over and over again, right? Because it just gets repetitive whenever I have to explain a rejection here. So PC, if this doesn't make sense to you, just let me know. There's no problem with me explaining it again. I just want to make sure that I'm actually explaining it to a way that you guys understand what I'm saying here. Perfect. Okay. Yeah, great. So PC is asking, how did I draw the zone? You draw the zone by using the K2SR indicator. You turn the K2SR indicator, and there are your zones, right? You have the zones all over the place. So in order to draw the zone, you open a rectangle tool and you just draw over it. I mean, you can leave it on here if you like. Like, you can just leave the K2SR if you want, but I personally don't like leaving it on here because it's just too messy. There's just too much stuff going on. So instead of having this on here, I just get the rectangle tool, I draw a rectangle over it, and then I turn it off. And there you go, you have the zone. Whenever there's a zone within a zone like this right here, because you have a big zone and then you have a small zone within it, right? It just becomes one big zone. It engulfs it. Right here, separate zone. Right here, separate zone. And if you guys want to figure this out, or if you guys want to learn how to draw these zones, there's a video in the course for the K2SR zones. So right there, and again right here. And here's another example of it engulfing. So for example, right here, we have this big zone and there's a zone within it. So if there's a zone within it, you just create one big zone, which engulfs it. You turn that off and there you go. You have some perfectly drawn zones there. And you can see where price rejects off these points. All right. So that's it with these questions here, and move on to the next one. All right, let me scroll down real quick. See, professor said, I thought initially you had to reject by closing outside the zone. So this was very helpful. Yeah, no, definitely, professor. And that's why I'm trying to make it like as simple as possible, because I feel like the problem is a lot of people here in K2, you guys come from different groups. So what happens is you guys learn different techniques from different people. And I feel like a lot of other people make things a lot more complicated, right? For me, all my strategies are like, I've dumbed it down where literally anybody can learn this. So look, if the thing here, if you look at the requirements for the snipe, the requirement for that is that it's rejecting off a K2SR zone. If I wanted it to reject outside, that would be part of the requirements here. That's why I try to make the requirements as simple as possible, because I don't want to confuse anybody. So like what professor said, he thought that it was supposed to close outside the zone. If that was part of the requirement, I would have that here. So it wouldn't say rejecting off K2SR zone, it would say rejecting outside K2SR zone, right? So since it doesn't have that, that's not one of the requirements. So whenever you guys look at the requirements here, they're literally what they say. If it says rejection off K2SR zone, that's all it's asking for. It's not asking that it rejects outside. Same with the pivot over here, rejecting off any pivot. It doesn't matter which pivot it rejects off. It just has to be any pivot or the farthest pivot from where it's rejecting from. Like for an example, this morning, this candle right here. So this candle right here rejects off both the green and the blue pivot, right? It says any pivot, but by any pivot, it just means the farthest pivot, because this would just be irrelevant, right? The green one would be irrelevant because if this wouldn't count, the blue one would still count. So you just go for the one that's farthest away. And yeah, I think that's it. Every time we have these mentoring sessions and I go over, one of these basic theories here, I just want to dive really deep into it so that when people watch the most recent mentoring session, they'll be able to see the stuff that confuses the majority of people. So that's why I'm just delving into this. I'm not like delving into this because one specific person asked a question regarding pivots or regarding the strategy. I'm going deep into this because I don't want future people to be more confused with the stuff people were confused with prior. So I think that's it with the snipes here. Is there any other questions for the snipes before I move on? Just want to make sure, because I don't want to go forward and then people have questions later and we have to go right back to our previous example. I think that's it, right, Professor? You guys are good, Professor and PC. Awesome. Okay, great. Glad I could help you guys with that. I know it's a little confusing at first, but the more that you guys apply it, the easier it'll be. Okay, perfect. Yeah, great. No problem. Yeah, definitely. Paul is asking, Sean, what are the inputs for the trend meter? Trend meter is always going to be the same, guys. If you guys are scalping, it's going to be same as chart. It's been the same that it's always been. So they changed it. So before I used to say same as chart, now it's just chart. I mean, it's the same thing, but yeah. for any snipes, you guys are going to use same as chart or just chart. Now they've updated it. It doesn't say same as chart anymore, it just says chart for the trend meter. If you guys are trading intraday, then you'll use the intraday settings, which are the default settings. But if you guys are scalping, it's not going to change. It's always going to be same as chart. So yeah, Paul, there goes the answer to your question. Let me scroll up real quick and see what else we've got here. All right, so professor said in terms of strategies with the 1 R to R, I'm aware that the 10-minute snipe, the 10-minute and 3-minute daily breakout and breakout. So those are the main strategies for sniping and I mean for scalping, professor. The other one that's 1-to-1 are the other strategies as well. I mean, every other strategy is 1-to-1, aside from the other scalping strategies. So if you're using the intraday strategy, it's a 1-to-1. So say, for example, if you're applying the intraday strategy, the original one, not the scalping one, but the intraday one. So if you're using the intraday, it's not meant for US 30, but we're using it for the 1 minute. But if you were to apply this strategy on FOREX or whatever you want to apply it for, this would be 1-to-1 as well. So for example, here, this would be 1-to-1. The pivot scalp strategy would be well, not the pivot scalp strategy, but the original pivot strategy. So again, right here, pivot strategy. Because the pivot strategy is it's the original one. So like, for example, if you applying the pivot strategy, it would just be this without the time frame, right? So literally all the strategies are 1-to-1, professor. I'm not sure if you reviewed all the strategies, but all the strategies are literally 1-to-1. The only strategies that aren't 1-to-1 are the scalp strategy. So if you're using the original pivot scalp, you know, you're looking for a sell signal below the pivots. This would also be 1-to-1 as well. Same thing there, 1-to-1. And that's how you run it. You'd put your stop loss at the previous swing, and then your TP would be equal distance away. So let me see if I can pull up the course real quick, and I'll just show, because literally all the strategies are 1-to-1. I'm not sure if like you were just focused on the scalps, but every strategy that's available is 1-to-1. Let's see. Here, let me see if I pull it up. Where's the curriculum? So I'll just go down the list right here, professor, so that you could be a little more aware of which ones are 1-to-1. All right, so here's the course right here, guys. Let me just scroll down real quick. So the ones that are 1-to-1 would be the breakout. Obviously, you know that. These scalps here are not going to be 1-to-1. The daily is going to be 1-to-1. The K2SR zone strategy is going to be 1-to-1. The intraday strategy is going to be 1-to-1. Momentum strategy is going to be 1-to-1. Pivot scalp strategy or pivot strategy is going to be 1-to-1. And I think those are all the strategies. So literally all the strategies except for the scalps are going to be 1-to-1. The reason why we can't have 1-to-1 for the scalps is because the movement's different. On the shorter time frame, you're going to get a lot of noise. So you're looking for the quick movements, and we're just looking to get in and out. For the intraday strategies over here, basically the SR zone and swing, you can have 1-to-1 because these trades run for a long time. So you can have that back and forth movement, but it's eventually going to hit your TP at some point. Same with the intraday right here. And for the momentum and pivot strategy, this is basically the pivot scalp. It's just it's used on a higher time frame. So hopefully that helps, professor. But yeah, if you want to go back and review, you'll see which ones are there. And I know a lot of people like to use a 1-to-1 because they feel a lot more confident and less nervous. Because I know the scalps can be stressful if like they don't go in your direction right away. Okay, so let me scroll back up and see what question is next. Done with that one. The next question was from PC. Okay. All right, so PC is asking, can you review how to determine the previous high and previous lows? Does it have to be a higher high? So now going back to what I was saying before, guys, you don't have to look at the higher highs or the lower lows. So let me just go over here real quick. So the first requirement for the high-low scalp strategy is to confirm the swing high and the swing low, right? So in order for you to confirm that, you would have to count 5 candles after the opening or after the high or the low. So for example, right here, we have a high, and down here we have a low, right? So after this low right here, how many candles have passed? 1, 2, 3. There's only 3 candles. You need 2 more candles for it to establish. There's been 5 candles there, right? So this is the low. 1, 2, 3, 4, 5. This low has now been established. It doesn't matter if it's a lower low or a higher high or lower high or lower low or a higher low. It doesn't matter. As long as there's 5 candles that pass, then it would be considered low. Same with this high right here, right? So we have the high right here. You want to wait for 5 candles after it. So we got 1, 2, 3, 4, 5. So this is the high, 1, 2, 3, 4, 5. This is now going to be established as a high. This low right here has been broken, so this is no longer the low. The new low would be right here. And here's another example. So for this right here, you can see that this candle right here touched it, right? If this candle touches it, this becomes a new low because this one's invalidated. So if you want to count this low right here, you got to count 5 candles after it. So this is a low. You want to count 5 candles. 1, 2, 3, 4. The 4 right there broke it, right? It came down. There was no 5 candles. So this would no longer be the low. This would now be the pending low. And you do the same thing. Count 5 candles. 1. There's no low right there. Move it lower. Touched it again right there. So this has been invalidated. This becomes a new low. Count 5 candles. 1, 2. It breaks it again, along with the low, and then it just starts over. So when the new low gets established, it just starts over. Again, right here, 5 candles, 1. And you're probably not going to find it today because this entire day price just kept pushing lower and lower. So it's going to be hard to look at examples here for the highs and the lows. I mean, for the highs, it'll be easy because the highs didn't get tested. Again, right here, there was a high. You count 1, 2, 3, 4, 5. 5 candles past it. This is established as a high. So does that make sense, PC? So I want to make sure before we move along with this right here, because your question was, how do you establish the highs and the lows? You're just looking for a low. The low will be pending until you have 5 candles after it. Once you have 5 candles that pass it, then it'll be established as the low or the high. So that's it with that right there. If there's still confusion there, PC, just let me know. Okay, perfect. So you're good. All right, PC confirmed that made sense. So let's go over to the next question. All right, so professor said there was a version 2 we took in session today for a sell. The candle was too big. You waited for a retracement before entering. What exactly were you looking for to determine whether or not the retracement had ended and the trade was ready to go back in our favor? So it's a bit subjective when you're waiting for the retracement, professor. This stuff just comes with, with time and practice, but because you'll see the same patterns happen over and over again. So for example, we took the version 2. It was one of the first ones I was here. I think it was like, let me see. It was right here. So literally right here, this was the entry, right? So it'd probably make more sense if you rewatch the live session after this, but just see what I have to say right here. So for example, this candle here is too big, right? And the reason why it's too big is because it's just huge. I mean, you just measure it and you're like, damn, 500 pips. If your stop loss is 300 pips and it has to retrace up, right? If it has to retrace up, your stop loss might get triggered if your stop loss is like right there, right? Because it usually retraces like halfway. A lot of times it'll retrace like halfway or even the full candle, and then it'll come back down. So during the live session, Professor, you can't see it here because you can't see it move like real time, like by the second. But for the candle here, what I was looking for was I was just waiting for it to push up high enough. Because the thing is, our entry point was going to be right here, right? Because we enter on the close of the candle. I'm looking for it to push high enough so I can put a sell stop there. So if it pushes up like 100 pips or 200 pips or whatever, like there's no specific, there's no sweet spot. You can't like figure out, oh, price is just going to pull back and then come back down. You just want enough space to put your sell stop there. So when price pushes up slightly, this is what I did. Price pushed up about, I think 100 or 150 pips right there. And when price was around that area, I kept telling you guys during the live, I said, okay, I'm going to put a sell stop here so that when it comes down, it'll automatically fill and set the order through, right? I think for this one specifically, I was just waiting for it. I didn't have time to set the sell stop because it was just moving so fast. So when it got down to this point right here, I knew price was going to drop because when it pushes back down, it's eventually just going to drop. So I just ended up entering it manually, and then I just wrote it down further. So there's no specific, let me see. There's no specific like price point because the thing is, each candle is going to be different. Like for example, this one here only pushed up about like 150 pips, right? Sometimes you're going to get huge candles like this green one right here. This green one right here was like 500 pips, right? So this is all going to have to come through practice and experience because you can't measure this, Professor. Like for example, if you're waiting for the 1 minute candle, you can't be like, oh, I want to pull this up and see how many pips it goes up until I enter, right? You can't do that. It's going to happen too fast. So what you're looking for is you're just looking for the difference between each candle. So usually if I'm looking to enter right here, I'm looking for it to pull back maybe halfway. I don't have a specific number because it's not always going to be the same. This right here is about 180 pips. If I was looking to enter off this green one right here, even though it's not an entry, the number for this right here is going to be a lot higher, right? It's going to be like 300 pips, if not 400 pips. So I would say the key spot to look for would either be the middle point of the body or a little less than that. So maybe a quarter of it. So either half or a quarter of it. And then once price gets to that point, you'll have enough space to put in your sell stop. But in real time, you're not going to have time to draw up like the measurements, right? It's just going to happen. So for me specifically, I'm looking for about price to pull back either halfway or a quarter of it. That's going to be like the bird's eye view of identifying when the retracement is likely to end. But either way, it doesn't matter because, for example, right here, so that thing that I just mentioned, if price goes up here and then you have a sell stop right here, like if price goes up to that point and you have your sell stop right there, it wouldn't matter because even if it goes up to the full candle, it'll still hit your order when it comes back down, right? It doesn't make a difference if it goes up halfway and it comes back down, it'll still fill your order. If it goes up all the way and comes back down, it'll still fill your order. So it doesn't really make a difference how far it pushes up, but I think the rule of thumb would probably be either like halfway of the body or a quarter of it. Because the thing is, it's like you have like a split second to make the decision whether you want to take the trade or not. If you don't feel comfortable about it, then I would recommend just not taking it. But if you do feel comfortable about it, and once it gets to halfway, just put a sell stop there, and then you should be good. All right, Professor, good with that one. So that is the answer for that question. Let me scroll over here real quick. Frank's asking if I can show an example of a 10-minute snipe. So I showed the example earlier, Frank. Let me see if I can find another one, unless you're okay with that example for today, because I don't see anything else that came up after it. There's no new zones around this area, but I can see if I could possibly, find one, like another example. It's going to be hard to find examples around this area because the market just opened on Monday. But let me see if I can find. Go over here real quick. Okay, so we have one right over here. Sorry, I had to sneeze. All right, so we have that right there. Let me draw the, there's a zone right there. Let me just replay it to that specific candle. And I'll put the requirements right over here. So this was like last week on the 6th, like middle of the week. I think this was like Wednesday. Here's the snipe requirements. So looking at this specific candle right here, we have a wick rejection off the pivot, which is the first requirement. That means that this wick would have to reject off any pivot here. It's rejecting off this pivot right here. So that's going to be the first requirement. The second requirement, you want to confirm that it's rejecting off the K2SR zone. I drew this zone prior to rewinding time, and this would be a zone there. If you turn on the K2SR, you'll see that there's a zone right there. I just drew a zone over it to clean up the chart, and that would be the second requirement. The third requirement would be confirming that the wick isn't, that the wick rejecting off the pivot does not touch the candle body. So this pivot right here, you want to just make sure that it's not touching the body, which is down here. So all those have been met. It's good to go. The last requirement is that you're trading in the direction of momentum. So in order to confirm that, you want to look back to see where the previous momentum signal was. Right here, we have a sell signal. So you can see price is just retracing to the upside, but we still have the sell signal. So odds are it's probably going to come back down. With that said, you would enter this with a sell entry on the close of this candle. You enter it for a 500 pip move. And after that, if you were to let it run, full TP right there with little to no drawdown. And there's an example of a snipe. Other than that, I think that's it with that right there. Okay, cool. No problem, Frank. All right, we're good with that. Let's see what's the next question here. Let me scroll over here real quick and see what else I'm missing. Let's go, Frank. Paul wants me to take a look at the triple confluence around 10:30. 10:30, 8, 9, 9, 8, 7, 7:30 my time. Okay, so let me go over there real quick. I think that's the same one we looked at earlier, right, Paul? So let's go back over there to 7:30, I believe. It was the same one that we looked at earlier, but I'll go over it again one more time. It was this one right here. So this is the one that Paul wants us to go over. Basically, it's the same one. We'll just review it one more time so that you guys can see. So the reason why this was a triple confluence was the fact that this candle right here lined up with all three strategies. All right. All right, guys. So looking at this right here, this candle right here qualifies as an entry for the intraday. The first requirement is to confirm a valid K2 momentum signal. This is a valid signal because we have a sell signal with a red candle within it. That's requirement number one. Requirement number two, you want to confirm that the trend meter matches. So we have a sell signal right here. The trend meter is red with both of those in place. This is going to classify as an entry using the K2 momentum intraday strategy. The second strategy is going to be the K2 pivot. Basically for this, you just want to look for a valid sell signal below the pivots. Real simple. So guys, to make things as simple as possible, because I feel like a lot of people still get tripped up on these strategies here. These strategies are extremely simple. All you're looking for is for the momentum signal to match the trend meter. If it's red and red, you have an intraday entry. For the pivot scalp, you have a sell signal below the pivots. That's an entry, right? That's it. So you can literally identify this just by looking at the chart. If you have a sell signal, this is going to be your catalyst. You're looking for a sell signal, right? You want to make sure that it's valid. So the first thing you're looking for is a sell signal. All you're looking for next is if the trend meter is red and if it's below the pivots. It's not very difficult at all. I feel like a lot of people overcomplicate it, but literally when you get a sell signal, all you're looking, like the only thing that you're looking for is where is it with regard to the pivots? Is it below or above? It's below, right? So there's a pivot scalp. For intraday, this is even easier because you're just matching colors, right? There's like no work to do here. Literally, you're just like, okay, I see red and I see red. It lines up. So there goes your intraday entry right there. I feel like a lot of people like really get confused about this, but it's not that difficult. I've literally dumbed it down. I've dumbed down every single strategy so that you guys can't get confused. But for some reason, people still get confused. A valid momentum, let me go over this again. So these are the very bare basic things. I created these indicators to make things as simple as possible, but for some reason, people still get confused. A valid signal is if you get a red and red, right? A red candle within a red signal, that's valid. You get a valid buy signal if you have a green candle within a green signal. So green and green, valid. Red and red, valid. Like it's all a one-step look, right? If you look at this candle here and you have a valid sell, you just want to see if it's below the pivots and if the trend meter is red. You can literally just take a glance at it. Like I can just be looking at it from far away, and I could tell you exactly what's a pivot entry and what's a trend, intraday entry, right? There's one right there. There's not one right there. You just literally line it up. It's blue, right? So there's no entry there. Right here for the red, blue, no entry. Red, 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 red. It's like extremely simple, but I don't know, people still get confused. You're just looking to match colors. Unless you're colorblind, then maybe that might be an issue for you. But I don't think anyone here has that issue. But red and green, those are the only two colors you're looking for. If you see blue, you're just gonna ignore it. If you see green and green, good. See red and red, good. But it's really that simple. So guys, the only way that you guys will get better at this is if you guys practice and you guys look for what you practice to look for what you're looking for. So if you want to get better at identifying these triple confluences, just look for this every single time. Look for a valid sell signal and then see whether it's below the pivots and the trend meter is red. If everything lines up, then you're good. That's the only way that you guys will get better at this, if you guys keep applying it and then you know exactly what to look for. Because the problem is you see a lot of this noise on the chart and it confuses a lot of people. But if you guys are able to just focus on what's important, which are the colors, red or green, that will fix everything for you, right? If you guys need to do something for the pivots, because maybe this might confuse you because it's a red line, you can change the color. Like if this is too confusing for you guys can literally change the color to whatever color you want. Change it to some random color that doesn't even apply, right? Change both of the pivots here to black if that's going to help you out to identify if price is below or above the pivots, right? Because black lines aren't used at all on the whole chart. So if this helps you identify if price is below or above the pivots, then so be it. Go and change it to that. Or you can use like purple or something, right? I don't know, that like whatever helps you guys out, use it. You don't have to use what we're using here. If there's something else that works better for you, then you can easily just change it to whatever looks better or helps you see it better. Or you can even change the line. Like for example, if you don't like a solid line there, you can change it to crosses, right? So prices below the crosses, where prices, if it's going to be a pivot entry or not. There's a lot of customizability that you guys can do to make things cater to help you see things better. For me, it's like I'm just so used to looking at this here, so it works for me. But if not, you guys are always welcome to change the colors. I think even the trend meter here, you can change the color. Yeah, so if these colors here don't line up with what you're looking for, I mean, you can change them to whatever color you want. If you want them to be green, bright green, you can even change it to bright green. Originally the colors were bright green, but it was just too much of a strain, so I changed it to normal green. But it's up to you guys. If you want to change it to purple, pink, magenta, whatever you guys feel like, you guys can change it. Just whatever helps you guys identify this better. So yeah, anyways, back to this entry. So this is the one that Paul was asking about. So we already covered why this was an entry for the pivot scalp and the intraday. The last one is going to be for the high-low scalp. So first, you want to confirm the swing low. This is a swing low. Second, you want to confirm price breaks and closes past the previous swing. And guys, for this strategy right here too, this is actually really easy too, but I had to put the requirements here for you guys to understand what to look for. But realistically, all you're looking for is you're looking for a sell signal. This is always going to be your catalyst for this triple confluence, because if there's no sell signal there, you're not going to have an entry for the pivot scalp or the momentum. So the main thing that you guys want to look for at all times is going to be a valid momentum signal. Right here, we have a valid sell signal. And after that, you just have to confirm a few things. Is it trend meter red? Is it below the pivots? And is it breaking and closing below the previous low right here, right? So, I can probably even put the requirements here to make it even simpler. And that's probably what I'm going to eventually do. So let me just do this. K2 triple Confluence entry. So first you want to confirm a valid K2 momentum signal, right? That's it. Second, you want to confirm price is so we'll do this. Confirm signal matches K2 trend meter. Third, confirm price is below K2 pivots. Fourth, confirm price is breaking and closing below K2 high low. And that's literally it. Okay, so I'm just gonna take all this stuff off because I feel like this confuses a lot of people, but here, let me save this as the K2 1 minute triple Confluence. All right, so this is probably gonna make things a lot easier for you guys to not get confused, because I know there's like detailed requirements for these, but if you guys already know these strategies, you don't even need to look at them. So we're only looking for first requirement, K2 valid signal, right? Valid K2 momentum signal. There's a valid signal there. Second, confirm the signal matches the K2 trend meter. We have a sell signal, it matches the trend meter. Third, confirm prices below the K2 pivots. Prices below the pivots, or let's see, prices below pivots, or I'll do this. Prices above K2 pivots for buy, below for sell. And let me update this again. K2 1 minute triple Confluence. All right. Okay, confirm a valid K2 momentum signal. We have a valid signal there. Confirm signal matches K2 trend meter. We have a sell signal, it's matching the red trend meter down here. Third, confirm price is above K2 pivots for a buy, below for a sell. It's below right here for a sell. Fourth, you want to confirm price is breaking and closing below the K2 high low, which it's doing right there. And then you would enter on the open of the falling candle. You should be right there. So this will probably make things a lot simpler for a lot of people, because it just takes out all the fluff from the specific strategies. So, sorry, the TP stop loss is 130. So with that said right there, you let it enter and then full TP. So hopefully this helps you guys with the identifying of the entries here. But yeah, I think this would definitely make a big difference with regard to how you guys are getting confused with a Confluence. So let me see if there's anything else here. Oh, gotcha. Okay, Paul. Well, anyways, thanks for bringing that up anyways, because it helped me, narrow it down right here for, here, I'll change the name for this too. So this is gonna be the K2 1 minute strategy. And then let me just change the name for your K2 1 minute. All right, so there we go with that right there. Hopefully that helps you guys if there's anything that confuses you with regard to identifying these entries, but it's really simple, guys. The way that you guys will get better at this is just through practice. The more and more you guys apply it, the easier it'll be for you guys to identify. Scrolling down right here. Professor's asking, my trend meter looks different than yours on the 1 minute. Can you share your inputs? It's always been the same, Professor. Like for all scalps, it's always gonna be same as chart. I get this question like almost every day, guys. It's always gonna be same as chart. Nothing changes, right? It's been like this for a year now. So if you guys ever get confused, just pull up your trend meter. It's never been different. Every time we scalp, it's always going to be same as chart. If you're doing intraday, I'm not even going to talk about intraday because you guys aren't doing intraday. So if you guys ever go on it, just change it to same as chart. If you guys trade intraday, just go to defaults. This is like a question I get every day, and I'm still confused, like how people get this confused, because it's literally same as chart every single time for all charts. The reason why you're doing same as chart is because you want the trend meter to correlate with the time frame, right? Because if you're trading on the 1 minute, you want to know what the trend is for the 1 minute. Same with the 3 minute over here. If you're trading on the 3 minute, you want to know what the trend is for the 3 minute. You don't care what's going on an hour from now, because your trade's not going to go on for an hour. It's going to go on for a few minutes. So if you're trading if you're scalping on the 1 minute, 3 minute, or 10 minute, it's always going to be same as chart. You're not going to put any parameters in there. The only difference is when you're trading intraday, which majority of people here aren't trading intraday. But if you are, just reset it back to defaults, because the default ones are going to show you intraday. And the reason why you'll know that is because, so if you go back to reset settings, if you're trading intraday, you're looking for where the trend's moving, 30 minutes to 1 hour to 2 hours to 4 hours from now. So this would make sense, because if you enter a trade intraday, you're expecting to hold on to it for, the better half of the day, which should be going for up to 4 hours. However, when you're scalping, you don't even care what's going to happen 30 minutes from now, because you want to know what's happening right then and there. So if you guys are scalping, it's going to be same as chart. But if you're trading intraday, that's the only time it'll be different. So hopefully that makes sense for you guys. PC said you get the question because the default setting is not the chart. So yeah, because that's not default, PC. This indicator is made for intraday trading, right? This isn't even required for any of the scalping. The only scalping that it's required for is for the intraday strategy, which has been implemented into the triple confluence. If you look at any of the other strategies here, none of the strategies require the trend meter, right? There's no trend meter on the high-low scalp. There's no trend meter here for the pivot scalp. There's no trend meter for anything here. The only reason the trend meter is being used is for the intraday strategy. That isn't even a scalp strategy. It's just used as a confluence. So that's why it's not set as a default, because none of the scalping strategies require it. I mean, if you guys go and watch the videos, just like, what C6 said, it's in the K2 training videos. Like, it's the most basic setup of everything here. And you also have to use common sense, right? You have to use logic, because if you're scalping, it doesn't make sense for you to be looking on the higher time frames. Like, think about this. If you're trying to take a 1 minute trade, what does it matter that you're looking at the trend in the 30 minute, like in the next 30 minutes, right? The next 1 minute is not going to affect what happens in 30 minutes from now. Same with the 1 hour, same with the 2 hour, same with the 4 hour, right? Just use your logic. If you guys are trading on the 1 minute, what trend are you looking for? If you really want to set it to the 1 minute, just go to 1 minute for everything here. I mean, it's like basic common sense, right? You're not going to look at like what's happening from 30 minutes from now, or 1 hour, or 2 hour, or 4 hour. You want to know what's going on the 1 minute. So if you want to have it set to the 1 minute, or if this makes things easier for you guys, if you're trading on the 1 minute, set it all to 1 minute. If you're trading on the 3 minute, set it all to 3 minute. But the reason we have it same as chart is because it's the same thing as having it set to 3 minute, right? Look right there, trend mirror on 3 minutes, same thing. You have it set the same as chart. Nothing there changes, right, guys? So this is like goes back to like what I was saying earlier, guys. Like, I feel like a lot of people want to make it more complicated than it really is. The default settings are for intraday. The strategy the strategy that this is used for was intraday, right? Let me see if I can pull up the strategy videos here. I don't even have it up here anymore, but if you go back to the strategy videos, their default settings, because it's meant for that strategy. It's not meant for this strategy. That's why you guys have to change it, because you're using it for this specific strategy. So back to what I was saying, guys. If you guys ever need to go scalp, have it same as chart. If you ever want to go intraday, set it to the default settings, because that's what it's meant for, intraday settings. So hopefully that clears it up, because I know I get this question a lot, but it's usually from the people who don't watch the videos, right? You guys have to watch the videos. The videos explain literally everything. Um, and the problem with this is that I get like the same questions from like a lot of people, not you, professor, but just from other people. And none of them watch any of the videos. They just want to join K2 and be an amazing trader and ask me like a million questions, which could be answered if you guys watch the videos. So what I would recommend if you guys just joined K2 or if you guys are new, go back and watch the videos. Watch every single video. And I'll know if you watch the videos because I can pull up your profile here and I can see if you guys watch the videos. So before you guys ask me a question regarding something basic, I think from now on, I'm going to look at your guys' profile. And if you guys haven't watched the video, I'm not going to answer your questions. I just want to like be plain and simple with a lot of people. I don't mind answering questions for you guys, but if you guys don't want to put in the work, you guys are never going to get it, right? You guys have to struggle a little bit and understand what you're doing before asking me like every single question, like how do I set up MC4? There's YouTube for that. How do I use, certain things? How do I sign up for a broker? Guys, I'm not a broker. So like I get a lot of these basic questions where you guys can find the answer yourself. I'll answer trading questions, but when it comes to like really basic stuff, just watch the videos and you guys should have, all the help that you guys need right there. I just don't want to waste our time in this mentoring session because we've been on this session for an hour already. And if I'm going to do this weekly, I don't want to keep doing like going up to like 3 hours like we did last time. I want to make sure that we have like legit questions where people need help, and then we'll go forward with that. But anyways, let me get back to the questions here because I don't want to keep lingering. I just realized I've been on this for over an hour already. Next question is from, let's see. Yeah, so Paul asked the same exact question with the trend meter. So yeah, same thing with the trend meter, guys. Same as chart. Let me scroll over here again, and let me see what we have next. So let me scroll a little higher. Sorry, guys, I lost where I was at. Let me just extend this a little higher. All right, the next question was, Adil said basically there should be, yeah, actually we answered that already. Okay, so for Milizon over here. So Milizon's asking, on the first variation from this morning, you waited for a pullback and then entered on the way down. The second variation was similar, but smaller pullback. What was your thought process to enter the second variation earlier? So good question, Milizon. Let's go to that first one, or let's go to the second one, actually. I'll mark up the first one, and then we'll go to the second one, which was over, I think it was at like 7. I believe it was this one. This was the first one right here. And that's one that we took right there. So here's the first one. And guys, I don't mind answering questions. I just don't want to keep answering the same questions over and over again, right? So what I recommend, guys, if you guys are new here, before I go any deeper, if you guys are new here, go back and watch the previous live sessions because your question was probably answered like 100 times in the previous live sessions. I just want to make sure that our time spent here during these live sessions weekly are going to be used efficiently, right? Because we only have so much time in the week. And if I keep doing these weekly, I want these sessions to only last 2 hours max because I got other stuff to do too. So if this needs to be long, we might do this just maybe once a month. But if we want to keep doing it weekly, let's make sure that we come with like questions that haven't been answered before. And especially if you guys have asked that question before, because I know who's asked the same questions, that like you go back and watch the mentoring session where you asked that question the first time, right? Because I know who asked me the same questions. Like I know, I remember a lot of things. So if I see the same person asking the same question every single live session or every single mentoring session, I'm just going to refer back to the previous mentoring session where you asked the same exact question. And this doesn't go out to anyone specifically, but there's usually like certain people that keep asking the same question. And I just don't want to cut into our other people's time, right? Because we want to make sure that new questions you're getting asked or examples you're getting covered that are recent, not something that's been asked over and over and over again. Okay, so back to over here, Milizan. This was the first entry, and then this was the second entry right here for the variation version 2. So looking at this right here, this would be the second entry. And the reason why I was more likely to enter this right away was the fact that we had the pending sell. So for example, right here, we had a buy signal, right? What happens after the buy signal is a sell signal. The reason why I was hesitant over here is because we already had a sell signal. So price came up a bit and then it came back down. For this right here, price came up slightly. Well, it doesn't even show pull back that much, but price came up slightly. I mean, I guess you can kind of see it right here. You guys can see this wick right here, right? Because this is where price came up. The reason why I entered this right away was because when price pulled up, I realized that there was no sell signal right here. So what happens after the buy signal? Sell signal. And that's why I knew price was going to drop right here. So that's a specific reason why I entered right away. A higher probable trade for these variations is when there's a pending sell after it. So we have one right there. And then I think there was another one right here that I took myself after the live session. So let's see. Not right there. Not right there. Not right there. I mean, there was a sell entry right there too, but it's not one that, and I think we did take that one, but that's where I pulled out a little early because it hit TB too fast. Oh, okay. So this right here too. So this was a normal variation. This wasn't a version 2. This was a variation 1 because we had a double wick rejection right there. I actually entered into this one. This is where I made my profit after the live session. So this one right here, I either would have entered right away or I would have, you know, if the candle was big, I would have waited for some pullback. But since there was no big candle right here, I would have just entered this right away. And the reason for me entering it right away was because we have a pending sell signal. So we're looking for a sell right here. And there's no sell signal right here, right? So we have a sell variation, and then we have a sell signal that could come after. The thing with these sell signals, like if you guys measure these sell signals, each candle is usually more than 100 pips at the very least, right? This is like 240 pips. This one over here was like 300 pips. So I just need 100 pips, right? I need 100 pips to get my TP. So if I'm expecting a sell signal to come, I'm just going to enter right away because if once I get that sell signal, it's going to push down and hit my TP right away. So with this right here, I would have entered. There was no sell signal, but if there was, it would have been enough to hit the TP. So the sell signal came down there. Again, right here. So this, or no, sorry, this is a buy. Let me see if I can find another one here. That's not a variation. It's not a variation. No variation there. I swear I found like one other one here. I was looking. No variation there. No variation there. So for example, right here, if I'm looking for a variation at this point for a sell, if I saw a variation, I would enter it right away because there'd be a pending sell. Okay, I think this was it right here. So again, right here, another variation, version 1. For this right here, I probably would wait a little bit or I would just enter it right away because we have a pending sell signal right there. So if you let it run, there you go, full TP. And look where the full TP came with that sell signal, right? So you got the momentum pushed to the downside. and full TP hit right there. So there's an example of me not waiting for a big pullback or getting in like right after a small pullback has happened. It's when there's a pending signal in the direction of your trade. Yeah, so yeah, Emilazan said makes sense. Pending sell signal Confluence in the future. Yeah, exactly. It doesn't have to be a sell signal, but it could be a buy signal. So if you're looking for a variation for a buy, then you would be looking for the pending. So you'll see me sometimes on the live session. I'm telling you guys that, hey, this is probably like I'm gonna wait for a pullback or I'm gonna wait for a late entry because we don't have that pending signal. If there's a pending signal already, being set up, then I'm like, all right, I'm gonna enter this right away. So that's usually the difference between me increasing the probability or not. So that's why sometimes you guys will see me enter trades right away, and sometimes you'll see me wait because in a lot of instances, well, like this right here, this candle was kind of big, so I still probably would have waited a little bit, like for it to pull back, and then I probably would have entered for a discount and then just catch it, like drop heavily from there. So yeah, and this is probably going to be another requirement that I add to the strategy. Like as I mentioned before, guys, that strategy, the variation is still a work under progress. We've only been using it for like a couple months now. The version 1, it's only been being used for like maybe 2 months now. So we're going to the third month. Once we get into the third month, then maybe we'll start to establish it as an official strategy. We are applying it every day though, so you guys can see how well it works. The version 2, that's still brand new, so we're still looking to make that any better than we can, but obviously it works very well. So it's just going to be a matter of time, guys. Like it's just going to be a matter of time until we figure out what works better, what works worse, what can we add to it. One of the main things that we would add would be the pending signal here. That might be another requirement because the thing is we're focused on quality trades, right? So we want to make sure that almost every trade hits TP. So yeah, hopefully you guys that helped out with regard to what you guys were looking for. But yeah, let me move on to the next question. So let me scroll up real quick. So I answered. Sorry, let me scroll down a little bit. I don't even know where I'm at. Let me scroll up a little more. That was from Melzon. Okay, so that answer is from Melzon. Let me go down a little bit. Donnie said, in the variation, does the 2 wicks and the rejection have to be the same height? Yes, because you're looking for a double wick rejection off the high, right? So if it's not the same height, it's not going to be a double wick rejection, Donnie. It needs to be a double wick rejection off the high or the low. So for example, right here, so guys, just another reminder. So for the variation, don't overcomplicate the requirements here, guys, right? So you're looking for a double wick rejection. If you're looking for a double wick rejection off the candle, like off the high low, it has to reject off the specific high or the low, right? If the candle is less, so let me go back to your question. Donnie said, so it doesn't have to be the same height, but it just needs to be double wick rejection. I think there's another thing there where you're kind of overcomplicating it. The size of the wick doesn't matter. You're just looking for a double wick rejection off it. So for example, right here, I would have taken this because this would be a variation with a pending buy signal, right? So for example, here we have a sell signal. What comes after the sell signal? A buy signal. So I probably would have entered this right here. For that specific reason, because I do see it pushing up. But yeah, to your question right there, Donnie, it doesn't require, and there you go, full TP off that. And then if it did hit the TP right there, or hit the momentum signal, I don't know when it comes, probably right there, or eventually right there. But yeah, back to your question, Donnie, the size of the wick doesn't matter. What matters is that you're getting a double wick rejection off the high low. So Yeah, size doesn't matter. The only thing that matters is that it's rejecting off that same high or low. Let's see over here. Donnie said, I'm having difficulty determining which high-low is legitimate based on the Wicks. Yeah, so you don't have to determine that at all, Donnie. It's just going to be a double wick rejection. So, back to what I was saying like earlier today, guys, these requirements are literally all you're looking for. If I was requesting that you'd have to look for wick length, then it would be in the requirements, but it's not part of the requirements. So you're not looking for wick length at all. You're just looking for a double wick rejection. That's literally it. So my advice to a lot of people is just to don't overcomplicate it, right? I know it's hard not to overcomplicate it because you guys think that there's more to it, but realistically, there's nothing more to it. It's just a double wick rejection. So it doesn't matter what size, you're just looking for a double wick rejection to confirm that there's an entry there. So that's it with that question. Let me scroll down a little bit. B said, has there been a day where the 3-minute daily hasn't hit? I don't think I've seen one lose yet. There's actually been a lot, B, for the 3-minute. I mean, it depends on what you're applying it with, because we usually trade it in the direction of Confluence, but I've seen a couple where usually it's not like on a Friday. So Deswell, the member who created the strategy, he doesn't use it on Friday himself. I don't think he uses it on Monday either. But yeah, the one today right here hit, obviously. I mean, it's a high win percentage strategy. It works very well. That's the reason why we use it. But there are going to be days where it doesn't hit. So for example, this day it hit, let's see, Friday, which was on the 7th over here. 6:30. I think this might be a day where it didn't hit, but like I mentioned before, this isn't a strategy that's really used. Actually hit TP there too, or no, I didn't actually. So on Friday right here, I actually hit stop loss, but we wouldn't apply it on Friday. We don't apply any of the daily entries on a Friday because we don't want to be holding it for too long. But yeah, it looks like here on Friday, got close to TP, but didn't hit. So as you can see, Friday is usually not a good day. I think Thursday was kind of weird too. One thing that you guys want to keep in mind that last week was NFP. So you're going to see a lot of these weird movements in the market. Again, right here at 6:30. Some crazy movement right here. I think this probably would have hit stop loss before it hit TP. Yeah, so this didn't hit TP, it hit stop loss too. So this strategy isn't really one of the ones that we normally use. Like, it's not one of our staples because it's still in testing. But I mean, in this case, I don't think we would have even taken a buy because I think the bias was for a sell. So, I mean, I can't really confirm what the bias was that day unless we're looking at it real time, but it doesn't always hit if you're just going off the strategy without Confluence. Maybe if the Confluence was for a sell, we would have skipped this one. We probably did because we didn't take a trade on that day. But yeah, I wouldn't recommend using any of the strategies standalone. I mean, you guys can use it if you want to, but I would always recommend using the confluences that I use, right? The first confluence is going to be the retail sentiment. Second confluence is going to be the fundamentals. And then the third confluence, which would be the last one, would be the technicals. So technicals would always be last, which would include the strategy. Strategy would be last. So you just want to make sure, first thing is you're trading the proper direction, and then the strategies will allow you to enter trades in that direction. See if I missed anything here. Oh yeah, you're right, B. No, you're right. Sorry, I was, but I mean, either way, the one on Friday still would have hit stop loss. So even if you would have taken the one on Friday, which we wouldn't have taken, it still would have hit stop loss because your stop loss would still be 500. So it would hit 500 stop loss before it hit 500 TP, and the same with the day before that. But yeah, you're correct. The TP stop loss is 500 to 500. Let me scroll up real quick. See what the next question was. Yeah, no, exactly. Yeah. So B said, yeah, what I was meaning is if you're trading the right direction. Yeah, definitely. So maybe if you're trading the right direction, maybe it does hit every time, but I can't backtest it because I wouldn't know. But if you've been following it, so maybe you're right. Maybe you're right that if you've been following the confluences and you take the trade in that direction, it almost always hits, or if not always. Um, but I personally haven't backtested it that way. On the live session, we're more focused on the 1 minute. So I haven't really been documenting the 3 minute to see if it's been hitting or not. We're just more focused on the 1 minute, so I can't really give you that information, unfortunately. But if you've been following it, it's been hitting, then you could be 100% on point. I just can't confirm it myself. I see your question right there, B, regarding the breakout, but I'll come back to yours after I answer everyone else's question above. So let me scroll up real quick. Next question is from, let's see. Next question is from Adil. So Adil's asking, the double wick rejection can be different for every broker for version 1. It needs to have wick rejection for almost same price. How are you confident enough that the wick rejection will be the same? Because we're not basing it off FTMO, Adil. We're basing it off currency.com. None of our entries are based off FTMO. So it doesn't matter what's going on FTMO. What matters is what's going on TradingView, because we don't chart anything on FTMO. So it's irrelevant on FTMO. The indicators don't work on FTMO, so you wouldn't even be able to apply it yourself on there. The thing with the FTMO data too, so guys, I'm sure you guys have like matched like your MT4 with your TradingView. If you guys look at your MT4, it's not really that accurate. You're going to see a lot of price gaps, and you're going to see a lot of areas where price just doesn't really make sense how it's moving, right? Because you guys got to keep in mind that MT4 is such an outdated platform. That's why I don't really recommend people trade directly on it. And that's why majority of people, if you ever see people chart, everyone uses TradingView or they use something else, right? Not really many people use MT4 for charting unless they're doing something intraday or swing trading, because in that case, you can have, there's room for mistake, right? Like you can have little differences in pricing or markups, or you can have gaps in price. But with scalping, I wouldn't mark anything up on, I mean, you can mark it if you like, but I wouldn't base your entries off MT4 because there's just no comparison, right? It's like comparing a 1990s computer with a 2020 computer. TradingView is always going to be better with data and with its tools. So I would never mark up anything on MT4. I mean, if you guys need to, then, I mean, you guys don't have a choice, but I personally wouldn't recommend it. Yeah, like Jedi just said, there's a lot of glitches on MT4 too. So I don't use MT4 at all. Yeah, Dill's asking, so currency.com broker has accurate data and Wanda as well. Yeah, from what I've known. I mean, we've been using currency.com for years. There hasn't been any issues. I've used Wanda before. If you look at Wanda, the momentum signals are going to be different. The data isn't the same. So, I mean, you can use Wanda if you like, but I've been using currency.com for years now, and it hasn't had any issues. So all of our back testing and all of our, like pretty much everything that we've done has been on currency.com. We did use, I forgot what we used before, but their data wasn't good anymore. So we switched over to currency.com. I found currency.com to be more consistent, and there's less gaps in price, or like not really many gaps at all. So that's what I've been using, what I recommend. All right, let me scroll back up and see what else did I miss here. SS is asking, how do I get more confident when trading? I feel like I'm always hesitant to take trades. So I mean, the biggest thing that you can do to get more confident with trading, guys, is testing, right? Practicing, testing, back testing, forward testing, more practice. The more that you guys practice and the more that you guys see that the strategy hits, the more confident you guys will be with your entries, right? Because the thing is, if you trust the strategy, you would take it without hesitating. The problem why a lot of people are hesitating is because you haven't seen it work well enough, or see it work long enough for you guys to trust it, right? That's going to be the problem with majority of people. Like, it's like when you're driving a car. If you've only been driving a car twice, you're not going to be confident driving on the freeway. But if you've been driving a car for years, you don't even think about it, right? You'll be on your phone, you'll be playing with the radio, you'll be turning on your AC, you'll be doing so many different things and not even being paying attention to your driving because you're so confident with your driving. Same goes with trading, right? If you apply the same strategy over and over again, um, it just becomes second nature. Like for me, I'll enter trades and not even think about it. I'll just say, okay, there's a variation. I'll enter it without even thinking. Or I'll say, oh, there's a high low, and I'll just enter it without even thinking. The reason why I'm so confident with my trades is because I trust it. I've been doing it for so long that I don't really have to think about it, right? I don't have emotions that come into play. I don't get nervous. The only time I get nervous is if I FOMO into a trade. I always recommend people don't FOMO into trades, but even I do it still myself. So, not trying to be a hypocrite, but stuff like that never goes away. You never, like, your FOMO and your trade psychology never become perfect. You just get better at controlling it over time. So what I would recommend is to just keep practicing. Sometimes you have to eat some losses to build that confidence. And that's all part of the game, right? Like you can't be the best at it without, having at least a few drawbacks. So my main advice is to just keep practicing until you get good enough to feel confident without having to worry about the trade. So yeah, it's just going to take time, but overall you'll get it. All right, next question here is, let's see. So Adil, for sure at currency.com. I just saw your question for currency.com. All right, B's asking, can you go over how you drew zones real quick? Had to go for a second when you did it, heard engulfing, then had to go. Yeah, so depending on what time frame you want to trade on, B, it doesn't matter. You can use the zones on whatever time frame you like, but for the most part, we usually use a 10-minute. So in order to draw the zones, you want to turn on the K2SR version 2 indicator. So let me just turn everything off. This will clean it up so you know exactly what to look out for. All right. So this is kind of messy right here. The reason why it's messy because price is so far away, right? Price is like way down here. But let me go back and just replay it from this area. It'll probably look better. It doesn't look that much better, but let me just go back to where it was earlier. Okay, so in order to draw your zones, you'll just turn on the K2SR indicator. This is what a clean chart looks like. You'll turn on the K2SR version 2 indicator. There's a version 1, but it doesn't have the zones. Version 2 has zones. Version 1 just has the support and resistance. So you'll turn on this indicator. You'll have your lines right there. You can go from top to bottom or bottom to top, just up to you, whatever your preference is. I'll just go top to bottom right here to show you. The next thing you're going to do is you're going to open the rectangle tool. So once you have that, you'll draw rectangles over the zones. And this is just to clean up your chart. Because the thing is, this looks too messy, right? I don't like marking up the charts when it's so messy like this. I'd rather draw my own zones, turn this off, and then it just makes it so much easier to look at, right? So back to what I was saying, turn on the K2SR version 2 indicator, draw your zones. And here's a question that I get a lot. A lot of people ask, how do I get them to extend to the left and right? Just go to your settings. You can double click on it, go to style, and then normally your rectangle would look like that. If you want it to extend across the chart, you can hit extend right, it'll go to the right, hit extend left, it'll go to the left. I have mine set to pink. I just have that because it doesn't line up with any of the other colors. It doesn't confuse me. But if you want to use gray or blue, or whatever you guys want to use, you guys are more than welcome to change it to whatever color you like. But for mine, I have it preset to like a light red pinkish color. So I'll just draw these there. And if they overlap, just draw one big one. Another one right there. Another one right there. Another one right there. And then another one right there. All right, once you have that drawn up, you can turn off the indicator. And then you have like some perfectly drawn zones right there. It's kind of hard to see right here because price is so far away. But if you just go back to where price was earlier, you can see how price rejects off these points perfectly, right? Price comes up, bounces off, comes back down, bounces off. And what it does is it creates market structure for you so that you can identify when price is consolidating or when it's ranging. Like for example, right here, if you just zoom out, you can see where price is consolidating, right? Consolidation, breakout, consolidation, breakout, consolidation. You can see it's a pattern. Every time it goes from consolidation to breakout, to consolidation, to breakout, right? And this is important because you guys can know exactly where to be trading. So for example, here, breakout, consolidation, price comes back to this point, and now what's happening? It's consolidating, right? So it's probably what's gonna happen after it consolidates? It's gonna have to break out one way or the other. So you're looking for entries at this point. See price move forward, breaks out. What do you think is gonna happen from this point? It's probably gonna keep pushing down lower, right? And that's exactly what happened there. Price continues pushing. It's in consolidation again right here. What happens after the consolidation? Breakout, right? So price is consolidating. Then what do you think will happen here? Probably break out to the upside. That's exactly what happens. So this is why it's important that you guys have these zones here. I mean, if you guys want to be analyzing it. So the problem with a lot of people is they can't identify market structure. One way to train you to identify market structure is to just draw K2SR zones, draw them all day. Literally go back as far in time as you can. Like if you want to really practice to learn market structure, because that's a problem a lot of people have, they incorrectly identify market structure, just go as far back as you can. And then just practice, you know, zoom out, turn on K2SR version 2, draw your zones. It's not that difficult, you know, just draw your zones real quick. And then practice. So like what I was just telling you guys earlier, you know, practice is what's going to make it perfect. Like you're not going to be a master trader without practicing. You know, if you guys keep practicing over and over again, this becomes so easy where you don't even have to think. Like for example, right here, I'm talking to you guys and I'm drawing these zones. I have no focus on these zones right here. I'm just drawing over them. You turn off the indicator. Price is in consolidation right here. What's going to happen after consolidation? It's going to break out to the upside or break out to the downside, right? Push forward. It breaks out, right? So there's a breakout. It's in consolidation again right here. What's going to happen after consolidation? It's going to have to break out again. So if you guys want to practice, and there you go, price breaks out downwards, breaks back up upwards. If you guys want to practice this, you know, it's a good little tool to use to identify market structure so that you guys can get better at it. All right, back to the questions. Next question over here is from Kenneth. So Kenneth is asking for variation 2, hit a high low, then have a strong so the requirements for that, Kenneth, is you want to check where the high low is, and then the following candle it needs to be a strong candle in the opposite direction, but it also has to not have a wick after it. So going back to, I can see if I can find an example here to show you guys. Okay, here's a perfect example right here. So you're right, but you're missing a key thing. So you have a low right here. So you identify the low. The second requirement is that you have a strong opposite candle, just like you said. However, there can't be a wick on the bottom side. So if you're looking for a buy, there can't be a wick on the bottom. If you're looking for a sell, there can't be a wick on the top. So right here, the low, opposite candle is a strong green candle, no wick. That's going to be a variation version 2. It doesn't matter where the trend is. It doesn't matter where the trend meter is, the pivots, none of that matters because it's not one of the requirements. You can use that as an extra confluence so you know that you're trading in the proper direction, but realistically, it's not going to be one of the requirements, at least not yet, until we implement that later on. You know, those are just going to be extra confluences. So for example here, and the reason why I would be interested in taking this is the fact that we have a low, and what's pending here, a pending buy signal, right? Because we have a sell signal here. What's happened next is a buy signal. So if I see this here, full TP right there. And obviously you'd have to get out of the trade. I wouldn't take this trade, but I was just trying to explain like why I would be kind of inclined to take this trade here. The reason why I wouldn't take this is because the trend is still, or the fundamentals are still very low. Not super low, but they're still pretty low. And you can see right here that the retail sentiment is starting to shift to the other side. So yeah, those are the requirements for version 2, but I probably wouldn't have taken this. The only reason why I would maybe take it was the fact that there was a pending buy, but I probably wouldn't, because during this time, this was earlier, I believe. Yeah, it was earlier. The momentum is still for a sell. So although it's not a requirement, I wouldn't really take any trades against the trend. So the trend's down right here for a sell, and I probably wouldn't take any sells. I would look for the opposite trades. So I wouldn't take any buys. I would look for some sells here. Nothing there, nothing there. Yeah, there really isn't any trades here. But yeah, there's the basic gist of the version 2. Scroll down a little lower. See, CT said to check the chart on Telegram. Damn, CT, you got so much stuff. Oh, okay, I see. I was trying to figure out what to look at. You just got like a lot of stuff going on the chart. I do see the sell entry there. I'm assuming these are like your order blocks down here. That you said almost a variation right behind it. So looking at this right here, this was at 610. Oh, are you talking about this one over here with your I keep the gone. Yeah, you had the gone right there. I'm assuming that's what you're referring to, this one right here, because you had the sell entry right here. Well, there's actually a variation right there, right below it. I think that's the same one that we were looking at, right? 620, yeah. So this is the one that you were looking at right here. And that was the same one that we covered. Yeah, right there. Almost a variation right here too, or no, there wasn't. But definitely right here. I think this is the one that we just looked at, yeah. So there was a, no second sell almost, but there was a red candle signal to dissipate a sell. Here, let me just go back from here. Oh, this one over here. Okay. So I think you were, I mean, yeah, they were both kind of close. Like the wick just didn't touch it, but it was close to it. And same with this one over here. Yeah, no, they're both pretty close. This one was, I think this one was probably the one that you were referring to. This one was pretty close right here. Like, yeah, if it touched it right there for double wick rejection, if there was a rejection there, then yeah, I probably would have taken that because there'd be a pending sell. And when the sell did come, it came right after right there. Oh, gotcha. Yeah. So CT said only reason he marked it was due to the mixed signal anticipating a sell. Yeah, no, in a lot of instances like this, guys, like sometimes I'll see people where they'll enter a trade because they're anticipating a variation, but they enter it on accident, or they just, sometimes people just enter it. But yeah, like CT said, he would enter it because he was anticipating a sell, and he guessed right because that's usually what happens after it. And using your see if there's anything else right here. Yeah, but I mean that would have been good. I was trying to see if your GAN like lined up with it, but there would be a lot of reasons why this would be a pretty decent sell too. You basically got into this trade early before it dropped. Oh gosh, on the 3-minute. Okay. Yeah, so that would have lined up with your entry right there. No, that's good. And that's one thing that you guys can use, right? Like I have like these set in stone strategies, but like CT has his own strategies that he applies. And if you can incorporate these principles into, the own strategies that you guys use, even better, because there's a ton of opportunity out there. And there's not just one strategy to be applying. There's like a whole bunch that you guys can implement. Oh yeah, I missed it. So yeah, Adele said there was just a variation. There was one right here. I wouldn't have taken it. I don't really like trading during Asia, guys. It's because the spread's too wide. So I personally don't like trading during Asia. So even though there was a variation right here, I wouldn't have taken it. But no, Adele, you're 100% spot on with that trade right there. There was a low there, variation version 2, because there's a strong green candle. And if you wanted to take this for a long, that would have hit full TP already right there. Oh, and you can see right there. So that's perfect. This fits the exact setup that we were looking for. There's a variation right here, and then there's a pending buy. You can see from this candle right here that there's a pending signal that comes up. Or there was. Oh, that was weird. It came up and then disappeared. Yeah, right there. So it came up and then it disappeared. But that's the momentum that we would be looking for, because it would have just been a straight win. Yeah, exactly. CT said quadruple confluence. Yeah, because CT has his own principles that he uses. So he'll use K2 plus his. That's like a quadruple confluence right there, almost guaranteed win. So yeah, no, great work right there identifying that. Adele, I didn't take it, and I wouldn't plan on taking it because the problem with this is the spread's too wide. So I wouldn't have wanted to, obviously hop into it. All right, let me scroll up. I'm gonna try to get through the rest of these questions. We've been on the session for 2 hours now, so I just want to get through with it so that I can go make dinner. So let me just get through these questions real quick. Let me see. Let me scroll down real quick. I think I answered these questions here. Answered Kenneth's question. Randy said, "Are you doing anything different when the market reversal happens?" No, I'm just not trading during market reversal. Or what I'm doing is I'm looking for the bias change. So like I mentioned over here, so this is the chart that I drew up during the live session, right? I drew this up like at 8 o'clock. So I knew this was already gonna happen because the same thing happens almost every day. So when the mid-market reversal is happening over here, Randy, I'm not doing anything different. I'm just waiting for, because the thing is I'm already anticipating this to come up. So I'm looking for the fundamentals to change, because right here, it was down like 100 points or whatever. And then as price got around this area, this is where it started to shift from red to green. And it got up around this area over here. So when it started to shift back into positive, then around this area, I'd start looking for entries. Nothing changes, same confluences. It's just, you just wait for it to shift the other way. And that's probably the only different thing. Nothing really different other than that. It's just using the same principles, but waiting for it to shift the other way so that you can confirm that it's going to keep pushing up higher and higher. Other than that, Randy said 2 hours. Come on, Sean, you don't have life. Just hold our hand through this. Yeah, no, definitely, Randy. I mean, I wish I could. Well, I try to give you guys as much time as possible. It's just, I know there's other people in this live session that don't have much time to be on here because a lot of people are located on different time zones. So it's not that I don't want to answer everyone's questions. It's just that, I want to make sure that everyone uses this time efficiently, because we don't want to keep going over basic stuff all the time when the answer could be, when the question could be answered either, just by watching the videos or by asking the group. So other than that, yeah, we just want to use this time efficiently, guys, right? Because a lot of people have to come and go. Like, people have work too, so they have to get through this live session, get their questions answered, and then log off. So just want to make it clear for everyone. Solange said, apologies if you answered this question already with a version 2. I know the second candle has to start with no wick, but is it valid if the first candle ends with no wick, or does it have to reject a little to show some rejection momentum? So this has so the answer to this question is it's two-sided, because the thing is, the requirement only requires that you look for a higher low, right? So sometimes you'll get a higher low with no wick. So technically, you don't need to have a wick rejection off it. That's only if you're applying the version 1, because you're looking for a double wick rejection. For the version 2, it's not necessarily required. Like, for example, right here, you get a low, but there's no wick. So in a lot of instances, you want the wick to be there to identify that price is like kind of pushing off, but realistically, it's not really necessary, because you'll see the reversal happen. I'm trying to find an entry here because I did take an entry. I don't remember when I took it, but I did take an entry. Right here. This is a perfect example. Right. So you're looking for, this is what Talanji was asking about. He was asking if there needed to be a wick rejection. For the strategy, it doesn't require any wick rejection at all. It just requires that you identify a high or a low, and then you have a strong candle following it like this right here. For this would technically be a variation version 2. We haven't had issues with this happening where it's led to losses. So if we do have losses, then we're going to document that, and we're going to keep that in mind. So in the future, if we have a lot of losses with these type of entries, then we're just going to have that as one of the requirements where there needs to be a wick rejection. However, for here, you can see that there's no wick there, but still hits TP. So it's not a requirement yet per se, but if we do see bad entries come up, then it might be a requirement. But currently right now, it's not a requirement. Yeah, exactly, Talanji. You could look different. So yeah, definitely that that helps. Thanks for that question, because I'm pretty sure a lot of people have that question as well. Scrolling down, Black Jedi is asking, how big should the candle be in terms of it being too big? You can't really measure it by pips, Jedi. You have to measure it according to the previous candles, right? So like, let me go back to, because it was kind of like what I was referring to earlier. Like, for example, for this one right here, the variation. So this variation, or this candle right here, would be considered big. The reason for it being big is because if you go back and just see how many candles it engulfed a lot of candles. Normal candle movement would probably be something like this candle right here, right? This candle is like about 100 pips. This is like a normal candle size, 100 pips, right? There's not going to be a specific number, because it depends on like when you're trading and how the candles are moving during that time period. Each day is going to have different conditions. So for example, here, these are like normal candles, probably like 100 pips or so, or maybe more, maybe like 150 or less. So we'll just use this as the average, right? Because if you look at the previous candles here, this is how much each candle generally moves, about 100, 150 pips. This candle right here moved about 450 pips, right? So this is way bigger compared to all of these other ones. So that's how you would identify whether it's a big candle or not. If it's like a lot bigger in comparison to all the previous candles. So these are small, these are small, these are small, these are small. This candle right here pretty much engulfs like, like 2-3 candles at a time. So if that's a case where it's a lot bigger, that's where you would consider this a big candle. If it's similar to like the previous candles over here, then you just consider that a normal candle. But the difference is just comparing it to the candles that have happened recently right before it. And that's how you'd identify it. It's not identified by pip number, it's identified by the size in comparison to the candles probably say 30 minutes or less ago. So hopefully that makes sense to you guys. Let's see. Next question is from B. B's asking, can you explain the confluence of why you would take a breakout? It's the same thing with every other trade, B. It's, a lot of people always ask me about the confluences. Confluences are never going to change, guys. It's retail sentiment, fundamentals, and then technicals in that order. So you're looking at the retail sentiment. If retail sentiment is short, you want fundamentals to be long. Vice versa, if retail sentiment is long, you want fundamentals to be short. If that's the case, where you have retail sentiment long, fundamentals are short, and the breakout to sell, then you're going to take that breakout. Vice versa, if retail sentiment is short, fundamentals are long, meaning it's green, and your breakout is a buy, then you're going to take that breakout because that's going to be the confluence. Confluence doesn't change with the strategies. Confluence will always be the same. So your first confluence will be retail sentiment. You want to line that up with fundamentals. If these don't line up, then you're not going to have bias at all, right? So you're not going to be looking to take the breakout. If you want to go for a riskier confluence, then you probably just look for the fundamentals. But in a lot of instances, that's probably not going to be what we'll be taking on the live. The only time I would take it is if they line up. So that's the main confluence that I look at when looking to take the breakout. Solange said sometimes it comes pullback quite accurate. Yeah, exactly, Solange. I agree. Sometimes there'll be a pullback and it'll come right back to it. Scrolling down. Let's see. B said, can you explain the confluences and thought process why you would? Okay, yeah. So I think I just answered that question for you right there. Your second question would be, if you don't mind, can you explain how to set alerts for the 3-minute and 10-minute? Yeah, sure. So what you would do here, B, is you would go to your chart. When you're setting the alert, you want to make sure that your chart, because the alert's going to be set to this specific chart. So for example, if you have a 1-minute chart, if you set any alerts here, it's going to set it for the 1 minute. If you want to set it to the 3-minute, make sure you're on a 3-minute chart, and then you just go to alert, do the same exact thing. Go to K2TS or K2 Momentum, whichever one that you guys have. If you guys are new, it'll be K2 Momentum. If you have the old one, it'll be K2TS, but it's the same thing. The name just changed over time because we always refer to it as the momentum signal. So whether it be K2TS or K2 Momentum, you click on that, you click on K2 signal fired, and then if you want it to notify you only once per bar or once per bar closed, that's what you would set it to. And then down here, you would just set the details. So if you're on a 3-minute chart, you'll set it to US 30, or you'll do K2 Momentum, US 30, 3-minute. And then you hit create, and then this will give you the 3-minute. Same with the 10-minute, you just make sure that you're on a 10-minute chart. You'll click on alert, you'll go to K2TS or K2 Momentum, and then same thing. Signal, K2 signal fired, once per bar closed, and then you'll just set the requirements down here. K2 10-minute US 30 momentum. And that's how you'd set it up. So other than that, I think that's it for that one. Nice. Yeah, no problem, Kenneth. Yeah, it's 1 a.m. for Kenneth. Yeah, I'll see you tomorrow during the live, Kenneth. Other than that, I think that's it. So I think that's it for the questions right now, guys. I think I answered everyone's question. If I missed anything, put it in the chat right now so I can go back and review, or just put your question in the chat again. Otherwise, I think that should be it. We've been on the session for a little over 2 hours. Let's see, B has one more question. Does it have to be required? Does it require open-ended to be ticked? No. So for that right there, if you have open-ended, so I have open-ended right here, right? This means that the alert will never expire. It just goes on forever until I delete it. If you have it to not open-ended, like if you're not on premium, you probably won't have this option. But if you have this, you can just set it as far back as you need to. I think like the farthest you can go back is like a month or 2 months or 3 months, or 3 months actually, yeah. So you just go back to the farthest month, and then you just set it there. And then after, so say next month, you want it to extend, just open this up again. Or what you'll do is you'll go here. You'll go to your alerts, and then you'll just go to edit, and then mine is open-ended, but if you have a date there, just go back and then push it back even further. So that's how you would set it up for this here. You don't have to have it open-ended though. It's just up to your ability to set it to that. I have it set to open-ended, so I don't have to adjust it every couple months. And B said, so you have it set to once per bar too? Yes, I do, because I want to know the signal before it closes. And that's how I know to look at the chart. So if I get a signal there, I have it set to once per bar. So it'll let me know, even though it's invalid. Like if it hasn't closed yet, it'll just let me know that there's a signal there so I can pull up that chart. That's what I would set it to. Hey, Miles. Yeah, Miles said once you perfect the high-low strategies, is there a way to create an alert for them? Probably. Yeah, no, eventually it'll so there was a couple things that people are asking. I think Adil asked me or a couple other people asked me to have an alert for the high lows. So that'll probably be in the works within, a period of time. And same with the high low. The problem with the high low is that it's the the code is kind of like it's hard to work with because this right here. So see how this stuff like is like you have to wait for it to close to be valid. The problem with this here is that it's going to be hard to code because there's going to be candles here that break past it. Like for example, we have 1, 2, 3, 4, 5. The alerts, like you can probably set it to where it touches it, but it's going to be hard to set it where the candle closes outside of it because that's what we're looking for, right? We're looking for the candle to close outside of the high. So I'm gonna have to work with my coder on that because there's gonna be a lot of obstacles. The problem with this is like when it touches before, like for example here, it touches it before it actually closes, it's gonna probably set an alert. Or like for example, if let me see if I can find one here. Like this right here. So we have this and then 5 candles pass, 1, 2, 3, 4, 5, and then this candle here touches it. This might set off an alert. So I'm gonna have to work with my coder to figure that out. But it's probably going to be something that will come up later in the future. Yeah, Solange said, yeah, that's one complex ass if statement. Yeah, no, exactly. It's kind of hard to have it set up that way. I mean, I have to figure out the logic. So I need to figure out a way to have it where it gives you an alert where it actually closes outside and not just touches it. But eventually, yeah, we'll probably have it set up. I'll probably have it set up where I can just even have it take my trades automatically, so I don't have to go in and take the trades. But we'll save that for another day once we get farther along with the strategy and with everything else. Like so, every time we have a new indicator, guys, it's because we need it, right? I don't just create indicators for no reason. I create indicators because they're actually helpful and useful to us. So if that does seem to be required in the future, then yeah, I'll work with my coder to create that, but it's probably going to take some time. Let's see. Professor said, Sean, these mentoring sessions are invaluable. Thank you for your commitment to us. By far, your service, best service I've ever invested. Yeah, definitely, Professor. And I'm glad to see because man, look, if you guys saw Professor's profits today, crazy, crazy. So, Professor, you've been killing it today. I know Professor has like 2 accounts now. And, I just want to give a shout out to Professor because Professor literally joined us a couple months ago, and he's made like such a huge like improvement since Professor's joined. So I'm glad to see Professor here doing really well. I know he took a loss there earlier, but he still did really well overall, right? I think he made still about 2 or 3,000 profit here, even though he had that loss. And then same with this account over here, he still had about 2 or 3,000 profit. But before that, all the profits that Professor is posting were pretty much solid, straight wins right there, and big wins too. So, I just want to give you a shout out, Professor, because you've been killing it. Huge improvement from when you first joined K2, and you're just going to get better every day. You're just going to keep getting better, just like everyone else. Yeah, no, definitely. Talon just said you made it so easy for us. Forever grateful. No, definitely, guys. And this helps me help you guys. So you guys use the indicators and strategies. You guys find the problems, and then I fix them. So when you fix them, we just get better every day. CT said, does variation 2 require a high-low mark? It's counter trend, correct? That is correct, CT. So the version 2 requires a high-low, but it doesn't require it to be established. So let's see, 506. I think you're talking about 506, which was like right here. Oh gosh, okay. Yeah, so this right here, CT, this would be okay, because you don't have to have it established. So you just need to have a high there and then that strong candle below it, like right here. So strong red candle, no wick on top, and you would take that for a short for variation version 2. And then, yeah, there you go, full TP. So yeah, no need for it to establish or to close, as long as it's there, because you can see that it repaints right here. And yeah, it works perfectly fine. And I wish I caught that. It was a nice catch, CT. I'm not sure if you caught that, but that like shot way down. Nice. Yeah, so CT actually caught that trade. Nice work, CT. I probably wouldn't have taken it because we didn't have the pending sell, but if we did, I for sure would probably hop into that with you. All right, other than that, I think that's it, guys. So that's it for the questions here. One more question from B. B said, just curious, are you going to stick with 15 lots from now on? So currently right now, I'm going to be, because I'm really confident in the market. But I don't know. We'll have to see how price moves. Like my like decision will change from day to day, especially with the market starting to shift here. This is why I'm like more inclined to take the higher lot sizes, because market is shifting and we're shifting with the market. So it makes it a lot easier for us to catch these moves here. But it'll just depend, right? So in the morning, I'll see how the market's moving. I'll see how news is. If there's a lot of news, probably wouldn't be taking that big of a risk. Like tomorrow, Powell is testifying at 7. So I don't even know if I'm going to trade tomorrow. It's like all Fed tomorrow. We have Fed member Mester, Fed member George, Fed member Powell. They're all speaking tomorrow. So tomorrow might be a 10 lot day, but it's just going to depend on the conditions for that day. But we'll see. I mean, if the market looks smooth, then maybe I'll keep using 15. If not, then I will probably go back to 10. It just depends on how I feel for that day. So yeah, other than that, guys, I think that's it for now. Yeah, definitely. Good night, B. And I'll see you guys tomorrow. So if you guys have any other questions, feel free to reach out. Hopefully I got everyone's questions here. And just keep in mind, I'm going to try to do these every week, guys, because I want to make sure that you guys are all 100%. I want to make sure that everyone's profiting just as much as their fellow members. For next week, let me see. I don't have my schedule yet for next week, so I'll try to let you guys know towards the end of the week. I know it's a holiday week, so it might be a bit different, but once I do get my schedule, I'll let you guys know. So other than that, guys, I will catch you guys tomorrow for the next live session. And if you guys have any other questions, feel free to reach out. Otherwise,